So I'm gonna analyze Paramount Global. Don't skip ahead. Okay, just relax, chill, grab a drink, coffee, whatever you're into. This is conversational, but it's gonna be fun. I'm gonna look at some charts, numbers, so at least for me. And so relax, sit back. First, I'm gonna start with the numbers. I'll look at some charts, and then a lot of visuals. Okay, that I've pulled up from the internets about Paramount to see where Paramount Plus and other streaming services that Paramount Global owns sit in the big picture. Might talk a little bit about other big pictures like movies and their contribution to the overall, metrics of the company. And I want to find out whether this company is actually really undervalued or overvalued, or is it going to zero to the moon. So that's what I'm trying to figure out. This is not going to be a total. This is not like a DCF analysis type of video. I'm just going to be looking at some numbers when it comes to growth, market share, things like that. All right, none of this accounting bullcrap. Okay, well, it's not bullcrap. Very valuable. You should understand it. And we're all going to start with the numbers. Okay, vegetables first. So, going into stockanalysis.com, which is my favorite website to kind of review companies. The market is determined a market capitalization of this company of about 16 billion at the moment. The price of the stock is 24.44, 24.26 including the after hours movement, by the way. Price to earnings ratio is sitting under 4, amazingly. That's not the same as the EV to earnings. We're going to look at that in a second. It's paying out a nice dividend, actually, about $1 per year, which equals to about almost 4% yield. So on par with bonds, and arguably less risk than bonds. First, the financials. Okay, this is the revenue. I'm gonna go straight to quarterly because it gives us a little bit of a better picture about what's going on here from quarter to quarter. So revenue has been flat to up. And then I like to look at operating income, which is, fairly flat. They've had a poor quarter, but that's to be expected. This is going to definitely be goosed. These numbers are going to be goosed, no pun intended, by Top Gun Maverick. And they're going to look a lot better. I mean, now that motion pictures are starting to get back into vogue, I feel like Paramount's got a big edge. I mean, there's such good filmmakers now with Mission Impossible coming out, and all of them. There's actually a bunch of films that are coming out, especially in 2023, that are going to be big hits, like 4 or 5 films. So I'm looking forward to all of those. I'm a big moviegoer myself. I like to go to the movies, so I'm looking forward to watching them. So anyways, moving on with the numbers. I like to look at whether they've been diluting shares or whether they've been buying back shares. So that is shares outstanding. Okay, so they're diluting shares by a little bit, but it's not really that big of a deal. It's kind of trivial. So not too bad. And ever since the acquisition, I guess in 2018 took place, I mean, it's been pretty flat. Before that, they were actually buying back shares for a long period. So I'm thinking they're making a push to kind of grow, and we'll see whether that's actually materializing or not in a second with some images, which some of these images that I'm going to show in a little bit are kind of dated, but you still get the picture. Okay, so moving on to statistics. Next up, statistics. Enterprise value of 30 billion, almost 29 billion. And subtract that, the market cap of 16, we get probably a total debt of, I'm good at math, 13 billion. So let's see. Balance sheet, net debt, net cash minus 13 billion. So there you go. I'm the mathematical genius of the world. So EV to earnings is 7.15. So price to earnings for EV means enterprise value is 7.15. The enterprise value is basically the business minus the debt. Okay. So All right, let's see. The payout ratio is 15. Some of the problems where they might be having here is in the cash flow department, by the way. So, they got free cash flow of minus 717 million, but I think that's definitely temporary, in my opinion, anyways. Dividends looking pretty good. They've been increasing the dividends steadily since 2000, since they were on record every couple years or so. All right. Now, the other one thing, by the way, the overview. Let's take a look at the stock price. It's been fairly flat, actually, for the last, 15 years or something like that. So, that's worth of note. But they have been paying dividends, and they'll continue to pay dividends. And by the way, they're a bigger and better company, I believe, in my opinion, now than they were back then. So after all these mergers and acquisitions, etc., I think they were good. And there could be more mergers and acquisitions in the future. I like to look at this chart kind of as like an overall view of the revenue plus earnings that they have each year and what the trends are. It looks like 2021 was a monster year, and they probably will revert to something like 2019. But actually not. I'm expecting them to beat 2019, and I think they're going to be on par with 2021 this year, and next year is going to be even better because of the motion pictures that are coming out. This is what just analysts think of the company. I mean, I actually value this. I think analysts are good because if anyone's going to take a look at the company, like, you might want to listen to other people who have done just as much homework as you, or even more homework than you, about the company. So I think analysts' opinion is not that to be discounted. There is that feature of analysts' opinions that they work for big companies, so they can't be wrong. So they tend to stick very closely to the actual price of the equity rather than sticking their neck out and trying to make a prediction based on their actual opinion. So they're trying to like keep their jobs, really, and the best guess for the price is the current price. So it's just a little bit minus or over the current price usually. Other things to note about the company is that they're doing stuff. Okay, like they just launched, apparently, with 150 international originals, as I'm reading the headline here, in UK and Ireland. So, I mean, that's pretty significant. UK and Ireland is like a big block of a big chunk of people. It's like a third of the US, all right, those two islands. There's a lot of people there. It's like 100 million people or something. So, that's not insignificant at all. And judging by what we're going to see in a minute, I think they're going to do really well in those two countries, considering the amount of content they have. I think the appetite in the UK and Ireland is fairly large for US shows. I'm not sure, but I think they're going to do well. If Netflix does well, I think they're going to do well too. All right, number one thing I want to bring to your attention when it comes to Paramount is the amount of assets they have. So we're going to look at the list of owned assets. So number one here is we got Paramount Pictures, and just these are all the production studios, which are quite numerous. BET Films, Nickelodeon Movies, etc. So they got tons of production here just on the motion picture side. And then we have the TV entertainment group, starting with CBS and moving on down the list. All these are basically channels and productions that fall into the Paramount Global umbrella. CBS News, Boston Bay Area, whatever, everything. CBS Sports, Sports Network, Sports HQ, Sports Radio. So all the stuff they own, and they have the rights to some pretty major, sporting events that shouldn't be ignored as well. So Paramount Media Networks, MTV, they got, I don't know, I personally don't watch TV anymore, and I haven't for like the last 15 years or something like that, but some people still have the cable and watch these shows. Maybe people who still live in their high school days, you know what I'm talking about, those football players and cheerleaders and whatnot have you, Key Club members that long for the days of the MTV. So some people still watch. We got Paramount Net, Pop TV, TV Line, VH1. You guys remember VH1? If you're around my age, if you're a little younger, you probably never watched VH1, but it's kind of like the competitor to MTV, I guess. It was slightly cooler at one point. Anyway, Nickelodeon TV, maybe you watched that as a kid. Maybe I think I turned on the channel like a few times, but never really got into any of the shows. Maybe if I was a bit younger. Pause, etc. So then we have Showtime, and Showtime is actually a contender, all right? Like Showtime is very popular still. So I wouldn't discount Showtime. BET networks. Then we have UK and Australia. You got Channel 5, blah blah blah. You have a ton of these. Latin networks, etc. So these are a lot of assets. Health Channel, the Good Channel, the Travel Channel, the Food Channel. Those are very widely viewed. So not to be discounted. But now we're getting to the meat of it, okay? I just want to give you a picture. If you haven't gone down this list, just to give you an idea of what this umbrella company actually has under it. So we've got BET Plus streaming service, CBS Sports HQ, CBS Streaming Network, ET Live, Noggin, I don't even know what that is. Paramount Plus, this is the big one that we want to talk about. Pluto TV is very popular. It's got a lot of view time. And then Showtime. So they have a lot of streaming services. I mean, it's kind of incredible actually. And did you guys know these guys own a publishing firm? I didn't even know this until I looked into it. And not only do they do that, the publishing firm is an umbrella, okay? Like, it actually owns other publishing firms. Simon & Schuster. I mean, some of them I've actually heard of. I mean, Atria Books, 37 Inc. I've actually heard of some of these. Keyword Press. If you're a book reader, I haven't heard of the rest of them. But anyways, they have miscellaneous. They have more holdings. 24/7 Sports. I don't know, what is that, college stuff? CBS and some more CBS. Fubo TV. Undisclosed Tech. What's that all about? Velo. Some of these are actually pretty big. Viacom in some countries. They're a very international company, I guess. Former assets, stuff that they got rid of. We don't need to look at that. And this one's important. Paramount Worldwide Television Licensing and Distribution. So basically they own the rights to stuff, right? And they let other networks show their stuff, and then they get a percentage of the view. It's going to come important, one of the charts that we're going to see. So I'm going into the charts now. They're not charts. They're like visuals. Okay, so wait. I'm not doing it yet. I'm going to start with the bang, with the most important one. Ready? Hold on. Is that a good snap? Okay, so what does this show? This shows streaming charts. This is the market share. Okay, so this is really important. Market share. And this is in 2021. January through December. One trend we can notice here is that Netflix going down almost every month. Picked up some subscriptions probably due to a show or something like that on April or May. And they continue a downward trend. So they're losing market share. They're going from 32% to like 25% market share. Prime Video from January to December losing market share. So the two big leaders are losing market share in the streaming service war. Disney Plus fairly flat. HBO Max gaining huge. Probably the biggest winner right now. So apparently, all these people probably finished Netflix, right? They finished Netflix, and so they want to try something else. HBO has traditionally had good content, so they're going to HBO Max. Hulu fairly flat, surprisingly. If you want something different, that you've watched all of Netflix and Prime Video, I guess Hulu's number 3 on the list when it comes to things that you should, you wanna see. So that's not that surprising. Apple TV, somewhat surprising, except I think they bundle it. I think Apple bundles it with like service subscriptions of other sorts, and also they have like promotions maybe for a year or whatever. So I'm not that surprised, I guess. But the biggest surprise is look at Paramount, from having almost no market share in January, February, to now actually growing quite substantially, almost taking out like 5% of the market share of the entire streaming services war here market. So that's really impressive, and this is in light of others gaining ground here in the last 3 months. Paramount's been definitely taking up a lot of market share. So that's really good. So it's not like it's declining, like dying, a source of content. And in fact, as I go through, we're going to discover some more insight. What does this show? This shows which service have you canceled since May. Okay. Since May 2020. I don't know how old this chart is, but it's like attrition rate, right? You want to have a low attrition rate, and Paramount Plus has the second lowest attrition rate, tied with Amazon Prime Video. So Discovery is the service that people cancel the least, and then it's Paramount and Prime Video. Hulu, HBO Max, Netflix, Disney Plus, and Apple TV at the top with the most canceled service. But most people, of course, almost 70%, don't cancel any of them. Alright, so this is a little bit, could be a little misleading, because I don't know if they mean 2% of their subscriber base, 2% of the total people that have a subscription. I don't know how this math is done, but I thought it's worth throwing out there in case it's in our favor here. Okay, next up, this is service satisfaction. Now this is not great, right? The HBO Max is kind of contradicting, because they have a relatively high attrition rate, and this is coupled with pretty good service satisfaction. So I don't actually know what to make of this. Either one or the other chart has to be kind of lying. But I do believe that Netflix has high customer satisfaction, because I enjoy the Netflix experience the most out of all the streaming services, because, go to the next episode, skip intro, everything's made for me, just like little things like that. It's surprisingly important, when it comes to streaming service. Like when I watched Hulu or, other services, I have to like click pause, stop, press the back button, try to find the next episode. I think I was watching Disney Star Wars. I was watching like Obi-Wan or whatever, or some, I watched a bunch of stuff, but I have to go back, right? I have to like press the back button in order to, and then scroll down, go to the seasons, go to episode. Like, it doesn't necessarily put me there all the time. And also searching for shows. There's no like recently viewed in some of these services, and so I have to like actually type in the search. If I want to find Obi-Wan, I have to like type in this. I know I'm ripping on Disney here, but other services have the same issue. Netflix got that figured out, so it's really easy to like pick up where you left off. All right, I don't want to burn the mic too hot here. Been yelling at the mic. Okay, next. All right, this one's cool, but I think it's a little outdated. Text is too small for me. Something 2021. It's really hard to read the small text underneath. It's hard to read the large text, but I'll just tell you what I'm looking at, because this picture is very small and hard to read. But what's happened is, do you guys see this blue thing? This like near the top says 7-8%, 6, 7, 8%. So this is premium subscription share of subscriptions. So SVOD, SVOD, share of subscriptions. What the hell does SVOD stand for? I kind of get it, right? It's like users, but what is SVOD? Googling live. Subscription video on demand. Okay, that's what I thought. Something like that. Subscription video on demand. Okay, so it seems like Paramount is gaining share here in Q2 2021. So it's not necessarily something new, but you can see the trend, right? The total pie is growing, and Paramount is definitely gaining out of it. The biggest reason for the increase of the pie is this purple, guys. Let's see. What is that? HBO Max. So HBO Max really grew the pie here. Well, you guys remember they also own Showtime too, right? And that's also growing. Actually, it's been 3 and then 4%. I guess it's kind of growing. So they have a reasonable size of the streaming market, actually. All right, next chart. Maybe you can see this one better. Demand shares of CBS shows on streaming services. So remember how I said that CBS charges people. I'm sorry, CBS. Paramount. I'll get it. Paramount charges, has rights on shows, and it charges people to show their shows. And this is the percentage of CBS shows on other streaming platforms. So most of it is obviously watched on Paramount because that's the largest content, but other services provide CBS shows too, and they pay them royalties, like Prime Video, HBO Max, Hulu, Peacock, and Netflix. So this is just money that's coming in there. All right, royalty money is the best money to receive, where you have to do nothing for it. Okay, that's the best. You want that. So they own the rights to so much content. I mean, they own the rights to Star Trek. Who else is a Star Trek nerd? I mean, I'm not a nerd. I just love Star Trek. Right? Okay. I wish I was as smart as a nerd. Okay, moving on. So, this graph just shows you don't need to read. This is just a bunch of industries on the bottom. It's not that interesting. But what is interesting is where cable networks fall into when it comes to margin. Right, their margins are in the high 30s. This is kind of an old graph, but it's 2019. But it doesn't matter, right? It's maybe the margins are a little bit worse now. But what's that meant to show is that the margins are actually really high on these. A potential for high margins are there on this type of business. You can see, I guess, Fox has the highest margin, Discovery has the highest margin, and Warner Media is 39. Viacom CBS actually used to have the lowest one at 28, but I think that could change. What are because you guys are curious, oil and gas, actually, production and exploration has the highest margins ever, over 50% sometimes. And then green and renewable energy, real estate, tobacco, telecom services. So if you want higher margins than that, you're going to have to go into the energy sector. That's what that's telling you. All right, which might not be a bad idea considering current market conditions. And final chart here. I know, we looked through a lot of charts, right? Aren't you happy you stayed? Netflix switching share of signups. So basically, users that cancel Netflix and subscribe to this service within 30 days after. So you can see that this big one here, 2019, 2021, and 2022 year to date. So this is a fairly recent chart in April 2022. So it's going to tell us a lot of updated information. Okay, so we're just going to look at these last two here. So they canceled Netflix, and in 2021 they went to this third column. And so apparently the biggest increase from 2020 to 2022 is Peacock. So that's the biggest beneficiary. But Paramount is actually increasing, right? It was 13% in 2021, but in 2022, this year, it's actually increasing in percentage. I think it's at 16 or 18. I can't read it. 16 or 18. I think that's 16. 16%. Hulu's actually taking up less than the previous year. So people are getting a little tired of Hulu. And then HBO Max is actually taking up less. Disney Plus is gaining. And basically Paramount and Peacock are gaining. That's about it. Everybody else is decreasing, including Apple TV as a market share here of these Netflix desubscribers. So, yeah, I mean, things are looking pretty positive for Paramount. And did I mention that they have a less than 4 PE, by the way, and have a bunch of hits coming out this year and next year on the movies that and people are going back to movies now? Did I mention that? So overall, undervalued. I mean, I'm a buyer. I've actually have like 1,400 shares right now. I do account review. I have a public account that I do a full thorough review Monday through Friday and make little video logs that last about like 10-15 minutes, and I do another topic. So I do own a bunch of I think maybe $34,000 worth of Paramount Global. So you can stay tuned for that. I also like to do these on the weekends, but this one I did today because I just had some extra time and I wanted to talk about it. So you can check those out. I do them on the weekends, usually Saturday and Sunday, but sometimes through the week. Nice and chill, no edits, none of that stuff. Okay, everything's feels like live, I guess. So if you enjoy this conversational style, then you can check out the other videos. But if not, then I don't know why you're still watching. It's pretty protracted and long. But anyway. All right. Hopefully you all enjoyed that, gave you some perspective, and perhaps made you either hit the bid or ask on Paramount, depending. I don't know if that influenced you at all. But of course, none of this is financial advice. All this information is just for entertainment purposes only. And, if you're confused about anything financial, consult with a professional, blah, blah. All right. That's it for now. Peace out.